talked about this notion of kind of energy price relativism, that the president seems perhaps pleasantly surprised that oil prices haven't climbed as much as maybe he feared they would, raising the specter of $200 a barrel oil. Oil prices are higher, but we're not at 2008 prices, for instance. What do you make of what he's talking about there, the fact that the spike has been sizable, but maybe not as bad as he and others might have feared?
I think that's true. If you go back to the 2008 or 2012 to 14, prices were over $100 a barrel. If you put that in today's dollars, that's like $160 a barrel. So we haven't seen that, and there wasn't that same kind of disruption that we're seeing now. But the question is still the relative calm before the storm. The longer this goes on, the more the risks on the upside grow, because the impacts are being felt. The last cargoes have arrived in Europe, in Asia, and inventories are being drawn down.
Is that what we're waiting for? Because my question is, why isn't it that bad? I'm confounded as a foreign policy person about the markets and their resilience, and how any sign of life from these negotiations from the White House, they seem to look for any shred of evidence that things are going to be okay. Why is that happening?
Well, you see a divergence between the financial markets, which, as you say, respond to the news, a deal is near or they're going to negotiate, and the reality of people in Asia actually not having enough oil, shortages, rationing, businesses closing down, restaurants not operating because they don't have energy. Right. So Asia is one area. Europe is starting to feel it, particularly jet fuel, and we're seeing it at the gasoline pump, but it's been there before.
Talk a bit more about that, the pain that many people around the world are feeling. And yes, we're fixated on the market price and futures and all of that, but there's a very real cost that's already taking effect here. And I'm curious sort of how you assess that level of pain.
Well, I think what was, I think one of the things that people didn't think about before this happened, if they thought about the Strait of Hormuz, they thought about oil. Maybe they thought about natural gas and LNG. They didn't think about fertilizer. They didn't think about helium. They didn't think about aluminum. They didn't think about petrochemicals. And it turned out that that region is much more integrated into the global economy because of all the economic development there. So it produces, about 30-40% of the world's helium, which you need to make semiconductors or MRI machines. So this is actually, unlike all the other things we were talking about in the last 20 years, this is a much bigger disruption of the global economy. But it's Asia, because basically, economically, the Strait of Hormuz went east. 80% of the oil, 90% of the LNG went to Asia, and that's where the shortfall is, in ways that people really didn't model.
I saw Fatih Birol of the International Energy Agency saying we are facing the biggest energy security threat in history. And I wonder if you agree with that assessment of the moment that we're in. I'm very curious what Dan Yergin's perspective is on this moment in the wider sweep of history.
Yeah, I think this is the biggest energy disruption we've ever seen. But as you say, it's ironic that we're not seeing the full price impact, and so time is really the key factor here.
When you look at this, is it so bad because geographically there's just really no alternative, as there have been in some other conflicts? Obviously there are pipelines that go out to the Red Sea, but you just can't get that volume through anywhere else. And as we've also been talking about, how concerned are you that this could be a chronic problem? Just because Iran agrees to something in the room doesn't mean they're going to change their minds if they've shown they have the capacity to shut this down.
Yeah, there was, until this happened, there was a thing called the TSS, the Traffic Separator System, where people understood that, okay, in an orderly way, this goes this way, this goes this way. Now there's going to be uncertainty over it, and it raises questions not only about the Strait, but it raises the question about freedom of seas on which the world economy and world trade really depends. So I think we come out of this, there's going to be an uneasiness about it, and so much will be critical as to what the outcome will be. Will there be an actual system and understanding of how this operates, or is it something that will fluctuate?
We last spoke with you 8 weeks ago, I think, at the beginning of this conflict. Yeah. Yes, and it was on the eve of
it was 8 weeks ago. I feel like you were just here. Okay, sorry, continue.
You are on the eve of going to run your conference in Texas, CERAWeek, and I'm very curious, with that in the rearview mirror, what those conversations were like. I imagine that your agenda had to be adjusted and changed as a result of what was happening in the Middle East, but what were the conversations like among executives that you had on stage and indeed had on the sidelines about this conflict? I think there
were two things. One goes to what we were talking about, which is the sense that that the market was underpricing risk. the longer it goes on. And I think that was a very strong message. And from the company people, you heard they were focused on constraints, logistics, how do you get supplies, how do you make up for supplies. So they were not looking at what the futures markets were doing, expectations. They were saying, how do we deliver oil? The other big thing, of course, the theme of the conference was big tech meets the energy industry. Where are you going to get the electricity for all the AI development, and what will be the sources? And so that was a theme that was in place before the crisis. But you could see really when it was in late January when the military buildup started, and that prices were already rising before the war started.
So what is the solution for that? I mean, as we talk about big tech data centers, this sudden spike in requirement coming at the same time there is an energy crunch. Green energy is not very popular right now. Alternatives are not very popular right now. Is that something that needs to be reevaluated? Do they need to reevaluate how they move this oil through the region? Is anyone talking about an alternative long-term plan so that we're not dealing with this every few years if this happens again and again?
Well, I think that out of this is going to come a bigger focus on energy security, and the Gulf countries themselves are going to say, what do we do to protect ourselves? What do we do in terms of investment within the Gulf and outside the Gulf? But I think that, this is the first, we're in the China EV era. 20% of the cars built in the world this year will be EVs, and that's going to get a tick up from this, certainly.
Wow.
In our last block, we talked about the blockade, the utility of it, the degree it's weighing on negotiations that are unfolding. And I know that there's been some debate about what the presence of that blockade, the strait being effectively closed, is going to mean for oil prices going forward. We have the President of the United States saying, and I'm going to paraphrase him here, he's got all the time in the world. If that blockade persists, if we see the kind of stalemate that we have been seeing for 3 months or 6 months or whatever, what is the effect that's going to have here?
Well, of course, sitting here, it's hard to believe that it will last for another 3 months or 6 months, but a lot's happened that this was all what war was going to be over in 5 days. I think there are two things. One is a question and the leverage point about how bad is the Iranian economy, how much strain can it take without the resources, and that's the bet of the U.S. blockade. I think the Iranian blockade, which it basically is that they can wage war on the world economy, and the pressure will be so great that they'll come out in a better position. And in a sense, it's a clash between these two blockades that's unfolding now.
We haven't talked about, on this point, we haven't talked about Karg Island in many weeks now, but that was something that was kind of looming as something the U.S. might do, try to take Karg Island or destroy Karg Island. Play out that scenario for us here, too. If things really go south in Islamabad, if there isn't any advancement in these talks, and President Trump, as he says he will pursue his military action once again, targeting power plants and infrastructure and perhaps the refining capabilities of Karg Island. What does that mean?
Well, Winston Churchill said once that once the war starts, what happens, whatever your plan is, what happens is unforeseeable and uncontrollable, and we're sort of in that state right now. I think Karg Island, as I understand, it's doable, but it's also very vulnerable from the shore because it's fairly close in, and our Iranian artillery and drones and so forth. I think one of the factors here that is new is that really the new form of warfare that was really beta tested in Ukraine is now being played out in the Gulf region, and that would affect decisions about Karg Island.
These are the cheap drones and other,
cheap drones.
And we were talking about, it's been fascinating to see this pivot for Vladimir Zelensky, who's had a good run of luck with Orban being ousted in Hungary and getting new allies in the Gulf as he's in Saudi and visiting the region and trying
to paraphrase, he has some cards now.
He does indeed. I want to go back to something you were saying earlier. When you look at these two economies, you're talking about the Iranian economy and how long they can last. But there's another issue here, and that's the U.S. economy. And we were just talking against the Admiral about wars of attrition. When you look at who can outlast, if this becomes a waiting game, you've got the very serious straits the Iranian economy is in. But you've also got some not happy American consumers and a midterm coming up and a president and a party who wants to get reelected. If this lingers into the fall, who blinks first?
Well, we certainly know that there's one thing. We see it every 2 years, every 4 years, that gasoline prices really matter, and they really matter at the polls. And clearly that's in everybody's calculations right now. But you look at the position of the U.S. economy, we're going to grow, 2% or more this year. And I think this is one of the things that the financial markets are so driven by what's happening with AI, data centers, that vast, is it going to be $800 billion or $1 trillion of investment this year, that's bolstering the overall economy. Obviously, gasoline prices remain, it's the most sensitive political price in this country. But our economy overall is, is the envy of many other people, and Iran's economy is actually in shambles.
Let me put an unfair question to you as the last one. I know you're not an expert on monetary policy, but we have a Fed that's adamant they can kind of see through this conflict, or they said that at the beginning of it. How difficult does that become if this conflict persists? In other words, what's the effect going to be on inflation in the economy broadly?
The question is, were we in an inflationary period beforehand for a lot of reasons, including the amount of expenditure and so forth, what's happened to supply chains? Once you build energy security, resilience in, that adds cost, and then simply all the inflationary impacts that come from these higher prices. And so you're going to, in order to see through inflation through this period, you're going to need really good glasses.
You're going to need really good glasses. We will leave it there.